Unlike what most of the people think around here, I'm not a Thai Indian.
Okay.
I'm actually born and brought up in India. Started my career in corporate finance. That time I didn't even have a passport, and I'm talking about late 2010, early 2011. I never dreamt of leaving my country, India. There were more startups than what there are even today back then. And it was supposed to be Silicon Valley of Southeast Asia. I was managing roughly $40 million, give and take, for the fund. If we screw up, we won't make money. But if we do what we are supposed to do, then sky's the limit. So we expanded to the Philippines, but then got sued. Why? Because somebody had registered our brand name prior to us launching. Late 2021, early 2022, where we closed roughly 70 million US.
Wow.
So in total, the company raised around 120 million US dollars and of equity and debt financing.
And still going strong.
And still going very, very strong.
If you've dealt with chronic pain, back pain, neck pain, knee pain, or even migraines, you know the drill. Take a prescription and hope it gets better. Well, today's sponsor, Form Recovery, is actually the opposite. They start by actually listening, a real consultation, and then they build a plan around what your body needs, whether that's physiotherapy, acupuncture, or lymphatic drainage. No quick fixes. They've got 4 clinics in Bangkok, so there's probably one near you. Visit Form Recovery today and start getting back to your best self.
Sawasdee krap, Sociology, and welcome back to TSN Talks. In today's episode, we have Gagan, founder and CEO of Wows Global. I'll get right onto it. Gagan, for people who have not heard from you before, how would you introduce yourself when you're not at a startup event?
First of all, thanks, Sunny, for having me. It's an absolute pleasure to be here tonight. Are you asking about my introduction or the company's?
I would love for your introduction first.
Oh, okay. So, as you know, my name is Gagan. I'm founder and CEO of Wows Global. Unlike what most of the people think around here, I'm not a Thai Indian. I'm actually born and brought up in India. Started my career in corporate finance, worked in India, then moved to Thailand in a corporate finance role, actually.
So you moved for a job?
For a job. I was actually relocated as an expatriate here.
So it wasn't expected?
Yeah. So it was more of a serendipity, right?
Wow.
Typically, finance profile people usually land up in Singapore, but as luck may have it, there was an opportunity here. And I never applied for this role. It's just that there was an opportunity, they thought I would be fit for it, and they asked me to relocate to Bangkok. And by that time, I didn't even have a passport. And I'm talking about late 2010, early 2011. I never dreamt of leaving my country, India. So, but then I got this opportunity, and it was very exciting. I couldn't say no. And I just packed my bags and moved to Thailand. That was back in 2011. So I worked here in corporate finance role for roughly 2.5 years. But I'm not sure how old were you back then, but that time Thailand was up and coming, particularly Bangkok. And there were more startups than what there are even today back then. And it was supposed to be Silicon Valley of Southeast Asia. And it makes total sense, or back then it made total sense because it's much cheaper to live in Thailand or in Bangkok versus Singapore. Geographically, it's phenomenally located with all the major cities in Southeast Asia. It's reasonable, affordable, at least arguably the best dollar value for money that you can get. And very easy to attract expatriates. All the people from the West or other parts of Asia love to move to the city. It's very, very comfortable and convenient. So there were a lot of startups and a lot of action was happening back then. And that's what intrigued me. So I started going to a lot of these events while I was at my corporate finance position. And as luck may have it, I got an opportunity to join venture capital. And that was my first, I'll say, exposure to this world. I had little to no understanding of how these things work. And there was not much internet as it is today. So whatever I could scrape from the limited information on the internet, I took that and I just joined this world. So
that was your first taste.
So this happened approximately in 2013-14. So I joined there as a senior associate, but then very quickly got promoted to partner's role. So I was managing roughly $40 million, give and take, for the fund. So it was quite an exciting time. Learned a lot about startup investing. Did that approximately for 2 years. Made quite a few investments on behalf of the funds. And in 2015, what happened was the fund pivoted and decided to become a venture builder. And that's when they were kind enough to give me an opportunity to build a company for them.
Okay.
And it was the best thing ever, right? Because I was getting exposure to build the company from like day zero. B, the capital risk was little to none because we are actually incubated by a very well funded fund, let me put it this way.
Okay.
So there were not many capital constraints, so we were allowed to make mistakes.
Right.
But the learning experience couldn't have been better. So that's when I joined this company called Delivery, which is a B2B tech logistics company.
Okay.
So we started that company in Thailand, made a lot of quintessential mistakes, just like any other company.
Is that your first company that you started, you say?
Yes, so that was the first company. The fund started and I was one of the first employees there.
Okay.
Right. So yeah, so the incubated company structure is very different from your own company.
Right.
So when you're starting your own company, you typically own 100% of the equity. But when you start working for these kind of funds or incubated company, then the large part of the equity is held by the fund, and all the C levels together roughly hold 20 to 25% of the company.
Right.
Yeah.
So it's majority owned by the fund.
Majority owned by the fund, but still not less by any means, right? But still, it's not as big as like 100% ownership.
But you don't have capital constraints like
exactly.
You said. So there are benefits to this as well.
And you get paid salary on day one. It's nowhere compared to the corporate salary that I was getting, by any means. It was rather less than 40% of that money.
Right.
But the equity upside was so high. Like I was betting on myself.
And that was enticing to you.
Exactly. So like, if we screw up, we won't make money. But if we do what we are supposed to do, then sky's the limit.
There's no ceiling.
Exactly, and sky has no limit, as you know.
Right.
So that's when we started building Delivery. Started in Thailand. None of the co-founding team members had any idea what logistics is.
Okay.
So and barely understood tech also back then.
Okay.
But it was pure like a bunch of guys trying to figure out how to build this, just having immense faith in ourselves, and sometimes ignorance is bliss.
Right.
So that worked in our advantage too.
Okay.
So started building this company in Thailand. The growth was not as expected, but because there were no capital constraints, we were able to quickly expand to Indonesia.
Right.
And that's when the company started seeing real traction, and we started showing a real J-curve growth, as they say.
Yeah.
So Indonesia business grew pretty well, and that allowed us to expand to the third market within the first 2 years of operations.
Wow.
And we expanded to the Philippines.
Okay.
So Philippines we expanded. It's a funny story. Sorry, I'm straying from the topic a bit, it's an interesting story and worth mentioning.
Yeah.
So we expanded to the Philippines, but then got sued. Why? Because somebody had registered our brand name prior to us launching.
Okay.
So there was this
copyright and
a bunch of people whose job was to register the trademarks of the fast-growing companies, so that when they come to Philippines, they could sue them and extort money.
Okay.
But so after launching, the company started seeing really good growth. But within 2 months, Facebook took our page down, Google took us down, and we're like, what do we do here?
Yeah.
But then we quickly rebranded to Transportify in the Philippines.
Okay.
And the business was anyways doing good, so it didn't matter much.
Right.
Although we got our trademark back in like 3 to 4 years, but by that time,
the new brand had already been certified.
Transportify was such a big brand already in the Philippines. Like we didn't really bother to switch back to Delivery.
Right.
So right now, Delivery operates in 3 markets: Thailand, Indonesia, and Philippines.
Okay.
And grew pretty well. The last round of the company was back in 2020, late 2021, early 2022, where we closed roughly 70 million US.
Wow.
So in total, the company raised around 120 million US dollars and of equity and debt financing.
And still going strong.
And still going very, very strong. It's not, so Delivery founder likes keeping the company very low profile.
Okay.
And that's how they prefer it. They're not like more vanity founder. They're not like that. So they like keeping low profile. They operate it like a quintessential B2B business. It's not a B2C, it's a B2B business.
Okay.
So that company did pretty well.
Right.
So that had been my journey from 2011 to 2022, early 2022.
From coming to Bangkok to going into venture capital to your first company, Delivery, which is, you raised 120 million. I mean, how did that feel?
I mean, it feels surreal but capital comes at a cost.
Right.
It sounds very exciting and it is encouraging, right? And it brings immense faith. And it allows you to do a lot of other things which you otherwise, because of lack of capital, would not be able to do. But it is, when you raise capital, you raise at a cost of slight freedom, because then you are accountable.
Yeah.
Right? So if you ask most of the founders what was the best time of building the company, everybody would say it's the first 2-3 years.
Right.
Because those days you come up with these crazy ideas.
It's exciting.
There's no pressure. There's no accountability to the outside world. So you have full autonomy, and you're doing your own stuff. So that allows you more flexibility, right? And it's more, I'll say, fun, because most of us are builders by nature, right? That's why we leave our very comfortable corporate expat jobs and start doing a startup which has less than 10% success rate, and I'm being generous here. So it needs a certain level of craziness, but the reason why anybody would want to do it was you are a builder by heart. Creating something of your own is probably the best feeling.
You need to embody that, you think?
Exactly.
You need to live that, like, I love to build and this is what I do, and you need to stick to it. Do you think people need to go with that mindset if they're approaching a company, building something of their own, building their own startup?
I think it should come from within.
Right.
It's a calling.
Yeah.
Right?
You cannot say to yourself that you're going to do it. It should come from...
It should come from within. And that's why if you ask any investor what's the first thing they would want to see in a founder before investing, most of them will say that how deep of a problem, of a personal problem is it for the founder to solve.
Right. Like how personal is it?
How personal is it? Because building a startup is arguably one of the toughest things you'll ever do in your life, right? And it's not a 1 year, 2 year, 3 year game. It's a 10-year game, and you give a vital portion of your life. And startup 10 years are easily equivalent to 2.5x of corporate life. So you're literally giving your career. And
more hours.
Exactly, more hours.
More responsibilities, more accountability.
Everything.
More everything, right?
Everything. You're a janitor on day one. So you're a CEO and you're an admin guy at the same time.
Operations, finance, admin, you're
doing everything. You have to learn on the job for the most part, right? Nobody believes in you, right? So it's demotivating also sometimes. It leads to self-doubt, right? Because when things don't go as per plan, and most of the people are discounting you and not taking you seriously. When you're lying on the bed sometime or waking up early morning and thinking like, am I doing the right thing? Or maybe everyone else is right. So
did you feel some of these when you were building Delivery at the start?
I still believe it. I still feel it every morning, man. And like, am I doing the right thing? No. But jokes apart, self-doubt is not bad, actually. It keeps you growing.
Right. Keeps you on your toes.
Exactly, and that's what you need.
Yeah.
If I'm overly confident, like everything is on autopilot and things are working fine, that might not be the ideal situation, until you have reached a certain scale, Founders being hands-off once the company is of a certain scale makes complete sense.
Yes.
But during the early days, 3, 4, 5 years, it's very important for you to stay very closely with the operations and with the other domains of the business. And some things would work as intended, but other things will break. The rule of 3 and 10 comes into play.
Right.
For your audience who might not know.
Why don't you expand on that?
Yeah, so what it means is that it's I think Japanese founder who said that. So whenever an organization triples in size, then all the systems that you have developed break.
You need new systems.
It needs a complete revamp. So this rule is applicable whenever you triple or you hit tens. So it's 1 to 3, everything will break. Now 3 to 10, everything will break. The 10 to 30, everything will break. Then 30 to 100, everything will break. And you have to reinvent. You have to restart. You have to rebuild the entire systems and processes.
That's interesting. Honestly, I've never heard of that, but it does make a lot of sense.
Yeah, and it happens. So as an early stage company, you grow faster than you think sometimes,
Right.
and it's a good thing. But then what leads to is that sometimes operations don't go as intended,
Doesn't
right?
function as it originally did.
Exactly.
Right.
Exactly. And then you have to go back to the drawing board and see where you're going wrong, fix it, hire more, or probably restructure a few departments to
Right.
make it work. So it's a very interesting journey.
Are these some of the common challenges you often see with startups who are between the first 3 years?
Yes, of course. Of course. Now, every founder has one. So, very rarely you come across founders who are good at everything, right?
Of course.
So, few are good at selling, few are good at operations, few are good at finance and legal,
Right.
few are good at phenomenal at tech, right? But they're not good at everything. So, typically, what we have seen is there is always a blind side for each founder,
Okay.
and that's what sometimes. For during early days, it's not visible, but when it comes big, right?
Okay.
And that's when the founder needs to, get out of their comfort zone of what their strong areas is, and sometimes are forced to learn things which they might not even like,
Right.
And that's why founder's journey is so damn exciting because, you're forced to do things which you don't really enjoy.
And you never thought you would have.
You never
be
thought
doing.
you'll have to do.
Yeah.
You're right. And during early days, you are generalist, right? But then again, the organization journey is you have to be generalist first, but after a while your organization reaches a certain scale, you call for specialists.
Right.
So it's a journey from generalist to specialist. But when specialists come and start doing their job, things get a tad boring. Let me tell you this.
Okay.
It's a good place to be,
Right.
but when it comes to building, not many organizations are able to keep that I'll say momentum and creativity in place.
Okay.
And the external parties come in, so you rather play safe and you focus on the core metrics, and everything else
Right.
takes a back seat.
Right.
So,
So when it becomes a little bit too bureaucratic, that's when things start to get a little bit boring, you say.
it is essential. Don't get me wrong. I'll keep on repeating.
Does that limit creativity in a sense?
For few organizations, it does, but then you have the likes of Apple and other big companies which are role model. Like despite being so big, they kept on coming with new products until Steve Jobs was there.
Right.
After that, they are again on
been-
autopilot mode, and we have not seen any real creation or any real innovation after that.
Right.
But then at the same time, most of the organizations I come across, the idea is to find a product market fit, find a scale, bring specialists in, and grow from there.
Okay.
Although it's a good problem to have and a good stage to be in, and I personally would want to be in that stage sooner than later, but the early days for me are still the best, because you can pivot, you can completely rebuild your business, like change your business model completely overnight and try it out.
Because you said so, and it's your own company.
Exactly,
You can do it.
exactly.
Yeah.
And it's a lean team, right? So you're a bunch of few people, everybody who
The vision
potentially
can change
exactly
very quickly.
exactly.
Nice.
Yeah.
That leads me to my very next question. Let's talk about WOWs.
Yep.
What inspired you to start WOWs Global?
I told you briefly, right? How personal is the problem for you?
Right.
So I'll
was-
tell you, not many people know why I started WOWs Global actually. So it's a very good question. So I'll tell you, when I was building delivery, I was in my mid to late 20s, and when I left, I was in my mid 30s.
Right.
So a lot of life happened during those 7-8 years while I was there. So I lost my dad.
Right.
A, I got married.
Okay.
B, I lost my dad. C, I had a son.
Okay.
Right? And there were multiple, so life happened.
Like a lot of stuff changed.
Life happened. And there were multiple instances during my tenure where I felt that I would have happy to get some liquidity for my shares because the company's valuation was skyrocketing, right? We were raising so much capital, the multiples were pretty good.
Yeah.
And I was hoping to get some liquidity against my shares, but that didn't happen. And as far as salary is concerned, I was not even getting paid what I was getting paid at my corporate job.
Right.
So I really wanted that liquidity. So when I was not getting it, I was like, okay, there should be some solution because typically founders are expected to hold equity until you go IPO or you sell.
Yeah.
Now, in the US, that period back during those days, 18 to 21, it used to be 7-8 years on an average. In fact, in certain cases, even lower.
Okay.
But in Southeast Asia, this was always over 10 years.
Right, until exit.
Until exit. And even the exits were not happening. So I was like, there should be some place for founders to get a portion of liquidity.
If
because
they choose to, because it's their own business.
it's their own business, and it allows you to diversify. Right? While it's very important to investors, for founders to stay invested in the business, but at the same time, there are a lot of things out of your control.
Right.
COVID, for example, who imagined that?
Yeah.
So many businesses died, right?
Exactly.
Sometimes regulations change overnight, right? Which are out of your control. Like the business which was legal, now suddenly is illegal, right? So it's always nice for a founder who's built something sizable to get a portion of the liquidity which they can invest in real estate, stocks, crypto if they like, whatever they choose, right? But I didn't get that chance, and I was like, I can't be the only one who have this problem. Then I looked around. There were so many other C-level execs and founders who wanted liquidity, but they didn't have any institutional platform where they could do it.
Okay.
And I thought it might be a good opportunity for us to build something relevant for this market.
Okay.
So the inception of Wows Global, or the genesis of Wows Global, was to build a secondary markets platform.
Okay.
And that's how we started. But as luck may have it, we started this company in 2022, and that time suddenly the market crashed. Right, the private market, which people were getting huge multiples until 2021. When 2022, a massive correction happened.
Okay.
So forget about secondaries, like the discounts on secondaries. So typically, when you sell the shares of private market shares, it's sold at a discount. So you don't get like
the full market price.
Full market price, because there's a discount for early liquidity.
Exactly.
So that discount, as per standard market, was around 10 to 20%.
Okay, so that was the original inception and vision of Wows
Global. Yeah.
Interesting.
So we started off as a cap table management tool and an ESOP management tool.
Right.
So that's how we started. But when we started 2022, market was pretty bad. The discounts went from 10 to 20% to 80%.
80%.
80%, because the valuations corrected.
Wow.
So no founder wanted to sell it. No investor was very comfortable.
Yeah.
So we're like, okay, what do we do now? So after that, we started doing, okay, secondaries are not happening. We built this tool. Let's add few more features on it.
Right.
And let's start doing fresh capital raise. Right. Because founders were struggling to raise capital.
As they always do in Thailand.
They always do in Thailand. So that's how we started. We switched from secondary markets platform to primary market platform.
Okay.
And from that time, we kept on adding more products and features and more types of financing options onto the platform. So today, if you ask what is Wows Global?
Yeah.
So Wows Global is essentially a private market ecosystem or operating system for private markets, as we call it.
Right.
Where we help SMEs as well as startups to help raise capital. It can be primary financing, that means fresh equity raise.
Okay.
It can be debt financing or loan financing, which can be of multiple forms. It could be term loan, it could be invoice factoring, it could be PO financing, it's called revenue-based financing. So that's the second thing we offer. And the third is secondaries. We are still very bullish on secondaries.
That was still your original idea. You're still holding on to that.
Exactly.
Because it's personal to an extent.
It's personal, and I still feel Southeast Asian market is a bit early for secondaries.
Right.
But maybe in the next 5 to 7 years, there will be at least one player who will be a unicorn doing secondaries market.
Right.
And we want to be one of those early. Because it's a network game, right?
First mover advantage.
First mover's advantage, building network and doing the same thing for 10 years. That builds credibility in 100%. The market. So that's what we do. So we are a one-stop shop for any kind of financing.
Right.
So that's one part of a function.
So primarily, you work with startups and SMEs. That's your bread and butter.
That is our bread and butter.
Okay.
Now, one extension which was not by choice but by force was our advisory business.
Okay.
So what happened was, when we started working with all these companies, the SMEs and the startups, we saw that because they were always budget constrained, right? They never hired professional finance people. They barely had accountants working for them. So the books and the financing things were not in order.
Right.
And so they asked us to look at their finances, fix their books before they could get capital.
Right.
So the second part of the business today, which is quite sizable, is an advisory division,
Right.
where we act as fractional CFO for these companies.
Okay, yeah, I heard a little bit on this. I mean, I read a lot of it on LinkedIn.
Yeah.
Talk a little bit more about this. So you act as fractional CFOs. How does that work? Is it like a... Go ahead, tell me. I can't even guess. How does fractional CFO work?
So CFO is Chief Financial Officer,
Yep.
right? But it comes at a certain level of seniority. And it's very different from accountants. Some people call their head of finance and CFO, but it's entirely different thing.
Okay.
It's like comparing a product person with a tech person.
Right.
Very different things.
Right, yeah.
So while CFO has accounting as one of their core skills, but they bring a lot more to the table. They bring finance expertise. They can advise on capital raise. They have a bit of knowledge on the legal element as well.
Right.
Typically, legal department also reports to CFO. And also the overall corporate structuring, holdco structuring.
Okay.
So there's a lot more complicated stuff that CFOs do.
That accountants don't.
That accountants don't,
Right.
unfortunately. Now, but that comes at a cost.
Absolutely.
While talking specifically about Thailand, a good accountant or a head of accounting can cost you anywhere between 100 to 150,000 baht.
Yep.
The one who has 15 years of experience, know local laws and can do that.
Yeah.
But a good CFO will cost you minimum of 300 to 400,000 baht a month.
Right.
Right? And as you might imagine, not many people can afford these kind of people,
Yeah.
or they don't want to pay that much money. So we saw an opportunity there where they can hire this level of expertise, a CFO level of expertise,
Right.
by paying 20 cents to a dollar,
A fraction of it.
a fraction of it.
Okay.
Because the job that CFO plays actually for early stage companies to mid stage companies is not a full-time role, because you don't need CFO to look to your nitty-gritties
clock
of the
in
work
every day and do that
right?
job. It's,
But you just need their advice. But when you need it, you want to do everything by the book so that you don't make mistakes that cost millions of dollars to the companies.
It sounds like a big picture kind of thing.
Big picture, but somebody who can advise you
Yeah.
and guide you on material elements of the business. So that's what we started doing. So we started providing fractional CFO services,
Okay.
where we work with their local teams
team.
to fix stuff, and if they don't have enough resources, then we have our own team, in-house
Right.
team that we provide to them.
And you can
so
advise on how to raise capital, whether to go the debt way or the
Exact.
equity way or what
First,
kind.
we fix books.
Right.
Because in Thailand, it's a very common culture to have 2 books or sometimes 3 books,
Right.
right? So we fixed that, advised our clients what's the right way to do things. They never even thought about debt DSCR ratios, debt service
Right.
coverage ratios. They
Right.
don't know all that stuff.
Yep,
They
yep.
just, and they don't know many financing opportunities beyond banks. And we all know how tight Thai banks are as of date.
Yep.
But we know that if we fix books, there are a lot of other financing opportunities which these entrepreneurs don't even know of.
Right.
So our job is to fix those books based on our experience, know which kind of financing would be best available and what price, and then get access to that kind of capital.
Okay.
So our advisory business essentially comprises of that, where we work with these kind of businesses, deep dive into their books, fix
Right.
their books, advise them on the corporate structuring so that they can minimize all the capital gains and other taxes,
Right.
and also make them ready for raising venture capital or other kinds of capital into the businesses.
Okay. Interesting.
Yep.
And I assume there's a lot of demand for fractional CFOs for Thai startups across Thailand.
I mean, yeah, 100%, 100%. In fact, in 2025, it was the fastest growing business segment for us.
Right.
So in my head, I've been a tech entrepreneur for a while. So I always wanted to build something that's hyper scalable, right?
Right.
Unfortunately, service business is not that. An advisory arm is a service business arm. So I was like fighting that battle within myself,
Right.
whether this is the right thing I'm doing or not.
Okay.
But then, with the advent of AI, the tech is no longer a moat.
Right.
By moat, I mean no longer a defensible thing. People
Right.
can build app by
Okay.
natural language now.
Yep.
You know,
Yep.
tools like Lovable are available in the market,
Yep.
where you can just by natural language, you can code and build a product
The
on their
barrier
own.
to entry is a lot less.
Lot less, right? But one thing which is sticky, even today, are services.
Right.
So if you master the services, you can build tech around it.
There will be demand for that
There will.
constantly.
So services make your business sticky. And once I understood it, we started growing pretty fast.
Right.
And we doubled down our efforts.
Okay.
And I'm proud to announce, we've been profitable for a while now.
Right.
But the scale is very quickly running to millions of dollars now.
Okay.
For the services business only.
Right.
While the other businesses are more transaction based,
Yeah.
it's a lot depends on the macro environment. But services business is pretty interesting and pretty sizable.
Right.
Is it very sexy? Probably not. But is it a cash cow? Yeah, definitely. And it's a tangible value for our clients too.
Right.
Right? For capital gain, for capital raise, sometimes we work really hard with our clients. We try to raise capital. We get the right investors. We deep dive into data rooms.
Right.
But there's so many external things that we don't have control on. That deals don't go through. So while founders appreciate our efforts, but ultimately there's not much tangible things we can show if there is no capital.
Yeah.
Whereas for fractional CFO and advisory thing, there is a tangible impact which they feel.
Yeah.
We provide reports to these founders and entrepreneurs which they previously didn't have had access to. We show them numbers which are good for their understanding of their own business. Right. One is account filing, but that's not enough, right? Everybody knows their revenue numbers. Everybody know their operation profitability. But there's a lot more. There's a lot many other metrics that entrepreneurs, if they know it, they can make better decisions or make their companies more profitable. And that's what we bring to the table. That's what we bring to the table. And even if the capital raise, success, no success, but fixing that kind of things is a tangible value.
Also sounds like it brings a lot of clarity to the business, right? The founder or the C-level executives, they're a lot more clear on what they have to do or what the vision is once it's passed on by the CFO because the numbers look good. So.
Exactly, you are spot on. And it's like a drug. Once you make people accustomed to getting those kind of reports, they want even more. They want even more insights. And there are few clients, I don't want to name them on the podcast, whose businesses, when we joined, they were making losses. And yes, the sales revenue grew, but the EBITDA margins and the unit economics have gotten so much better just because after hiring us, they had access to the insights that they previously didn't have.
They didn't think about it.
They never thought about it or they were not aware of it.
So this goes back to your blind side element that you talked about, right? The thing about blind side is everyone knows they have it, but you don't know where you have it.
You have it, right.
So, having someone to work with in that regard as a startup, I think, could be very beneficial.
Yep, indeed it is.
So, let's get to some quick fire questions. We'll do a brief segment on this. It'll be about WOWs, or some could be about you. Okay.
Yeah.
We'll just start with best investment WOWs made in 2025.
Best investment WOWs made.
Yeah.
Investment in our services business.
Okay.
So that's one. And as a company, investment. It's a long term. It's a time horizon, right? You don't know how good or bad your investments are until the company has been around for a few years.
Okay.
But I am very bullish on one payments company that we recently invested in.
Right.
The company is called Remitron. It'll go live in Q1 next year.
Right.
And this is the first time I'm talking about it on a public forum. So what that company does is, the future of payments is QR code based payments, right? People don't want to carry cash.
Yeah.
Cards are expensive, both for the payer and also the vendor gets money after 2 days, 3 days, and they pay 2.7%.
And fees.
And the fee on top. So what they are building is they're building an international QR code based payments integrated method. Ooh. So if you're an Indian tourist coming to Thailand, so in India everybody's paying you using UPI, right?
Yeah.
in Thailand, everybody's paying using PromptPay,
Yeah.
right? But if an Indian tourist is coming to Thailand, they have to pay either via cash or via card, right? There's no other way. But what they are allowing is, they are allowing Indian tourists to come to Thailand, scan and pay, just like they pay in their home country.
And it's deducted from
Deducted
their
their
bank account.
real time,
time.
money received here real time, just seamless.
Okay. Wow. Yeah.
Yeah, so it's a phenomenal product. It's a need of the hour.
Yeah.
And the first pilot test that they did was between India and Thailand. That worked phenomenally well.
Like a charm, always.
Well, yes, so yeah, it's payments, and
Okay.
the vision is to so they're making India as the base market, and they want to build over the next 2 years this payment infrastructure for entire Southeast Asia. So any Indian tourist going to Malaysia,
Yeah.
coming to Thailand, going to Vietnam, they should be able to pay via QR code.
QR code.
So
Lovely.
I'm very excited about this company,
Okay.
and we funded this company on day zero. It's more like our incubation,
Okay.
actually. So I'm helping that company personally to raise capital, working on their product alongside
Right,
them.
right.
I'm very, very bullish on that. company.
Looking forward to this. Let's
Yeah.
see how it goes. What's one thing startups do that drives you crazy?
Not showing financial data in their pitch decks.
Okay.
Yeah.
Interesting. As
Yeah.
an investor, that's the number one thing you're
That's
looking at.
the number one thing.
Without it, everything is just a moot point.
Exactly. You move point. Is that from Friends?
Yes, that is.
That's a good one. Okay. Yeah, you're absolutely right. So because financial numbers give investor clarity on your business. So don't expect investors to be experts of your business. You are the one who explain your business to the investors.
Right.
But what investors know are the fundamentals of the business. So if you're not giving financial data in your pitch deck, then it's purely a storytelling. We don't know your unit economics. We don't know whether you'll make money or lose money. We
That's
don't
true.
understand what your financial projections are. So it's very hard to evaluate the business.
Right.
So it's a quintessential mistake that sometimes the less financial numbers savvy founders make by not putting in that information.
Okay, so it's a requirement
It is a
at all
mandatory.
points.
Yeah.
And lastly, what's one startup trend you're watching in 2026, this year?
Oh, 2026. AI definitely,
Yeah.
it's here to stay. So no point talking about it. Everybody knows. But I still feel that fintech would continue to grow in this part of the world.
Right, Southeast
And
Asia, you mean?
Southeast Asia, yeah, and particularly Thailand. I see a massive opportunity of SME lending
Right,
business.
right.
So because
Are there regulations that are against that?
so surprisingly not that heavy.
Oh,
B2B SME lending,
right.
there's barely any licensing you need in Thailand.
Interesting.
B2C is what's quite complex.
B2C is
B2C
very-
is quite complex. But there's so many great businesses in Thailand, so many good cash flow businesses who are scrambling for capital.
Yeah.
Banks are not supporting them at all.
And the
right?
interest rate doesn't help.
Interest rates from banks is actually quite okay, I'll
Right.
say. 5% to 8%.
Right.
So it's not that bad. It's just the access to that capital is so difficult. Like people are going to all these loan sharks who are charging them 25, 30%,
yeah,
right?
absolutely.
So I personally see a lot of opportunity in the SME lending business in this country. So
Okay.
I think you'll see if somebody's building that, they can grow a really meaningful business.
Okay.
Because I work with this lot of SMEs and entrepreneurs,
And this
and
is a-
I
yeah.
that's my insight. Like you can make a very good IRR while helping supporting the ecosystem. So it's a
Right.
win-win.
Right,
for-
right.
yeah.
So a gap in the market potentially from
It is
from Gagan
100%.
here.
It's 100%.
Lastly, I wanted to talk to you about something as well. You were shortlisted as Aspire CFO Connect Trailblazer for taking the finance function from back office to front seat through tech-enabled transformation in 2022.
Yeah, that's
This
right.
was an award you received. How did that feel?
I mean, I'm Aspire. They're my friends. So I was actually one of their first clients when they launched in Thailand.
Okay.
At that time I was with delivery.
Okay.
But yeah, it feels good. But I don't.
But that's
No
so
offense
long
to
ago.
anyone. I love these guys, Aspire,
Yeah.
but I don't take awards seriously, man. I mean,
Okay.
everybody gets award every second
Yeah,
day. So
fair enough.
So yeah.
Fair enough. So yeah, any last closing piece of advice you'd like to give to startups and SMEs or other people potentially looking to work with WOWs or looking to grow their own company, potentially get capital from WOWs?
So since most of our audience are based in Thailand, my recommendation to all the aspiring Thai founders would be to think big.
Okay.
And that's my biggest issue with most of the founders I come across in Thailand, is
Right.
because they think very local.
Think too small.
They think too small. And
Right.
Thailand market can be pretty interesting, but within itself, it's not like massive scale.
Low purchasing power, right? Overall.
There is, it's better than Vietnam and Indonesia,
Right.
if you look at the numbers.
Interesting.
But at the same time, it's still 70 million people in total,
Exactly.
and it's quite fragmented. It's a very big country.
Yeah.
And apart from Bangkok metropolitan area, which has like 10, 12 million people,
Yep.
no other city has even 1 million people. So it's quite fragmented.
Yeah.
So to go deep within Thailand is not very easy, right? So you have to have an outward looking approach.
Okay.
So whatever you're building, think regional. It won't be easy. Every market has its own peculiarity. But being in Thailand, building just for Thailand might not be enough.
Okay.
And there are people who try to capture the entire country, but very few have been successful.
Right.
So having a regional approach and thinking bigger
Right.
is something which I hope Thai founders show, because there's a lot of talent in here. And
Okay.
the kind of team loyalty we see here in Thailand is unbelievable.
Right.
It's
Interesting.
unbelievable. The retention here is rather high for startups.
Okay. If
But
someone likes the vision, they tend to stay with it.
exactly, it's a culture.
It's
It's
a
a
culture.
wonderful country. People are loyalist
Yeah.
if they trust you.
If they trust you.
And they don't care about money that much. Unlike other countries, like for back in India,
Yeah.
people will switch job for 5% raise.
Right.
Here in Thailand, people might not switch job for 20% raise if they're happy in their work.
Right.
So that's a culture.
That's
so you have something good really going on for you.
Mm-hmm.
So build from Thailand for sure. It's a very good market, but think regional.
Think
That-
bigger.
Think bigger.
That's
That's software.
Great advice.
Yeah.
Okay. That's our podcast with Gagan, founder and CEO of Vows Global. I hope you all got a lot from this episode. Thank you for your time, Gagan. Great to have you on the podcast. Swadee krap.
Thank you. Thank you for having me. It was wonderful.